So I want to look at this trade. I want to look at this trade that that was in fact a losing trade that we took throughout the week, actually at the beginning of the week. And I want to look at how we are going to look at the chart going forward. So we are going to look at the failing trade, and then we are going to look at how are we going to look at the chart going forward. This is Australian dollar and Swiss franc. And initially when we opened the chart, this is what we saw. We saw that we have got a huge demand zone here, right? This was a good demand zone. We have got price moving to the upside, and this is on the daily time frame, right? And then we've got price auctioning then in between this high and this low. So it was a very long, it still is a consolidation, right? Or a ranging market. But what we know is that in this ranging market, we've got a high, which is this one here, and then we've got a low, which is this one here, right? Now we already had a bias on this currency pair, and our bias was that we're going to buy the Australian dollar against the Swiss franc. Why? It is because the Australian dollar, or the Central Bank of Australia, is one of the last central bank to cut rates this year, or is seen as one of the last central banks to cut. And then we know that the Swiss National Bank, which is the central bank for the Swiss franc, is intentionally devaluing their currency, which is using monetary policy, which is the Swiss franc, right? So now what we had then, or the trade that we took on the 26th of January, but before we go to the 4 hour, we can see that we have a demand zone here, right? We've got the market then reacting off of this demand zone. We've got the market again on a daily time frame coming in the demand zone and rejecting in the demand zone, right? So our bias is to the upside. Then it means that this demand zone, it's very good. It's on a daily, so it's our area of interest, right? So this is what happened then when the market came in on the 26th. Let me get, this is what happens when the market gets here on the 26th of January, right? Okay, good. So this is how I looked at this chart, right? Let me go to, let me go to the daily and see where we were. Okay, good. Give me a second, guys. I'm trying to remember. What happened here? Oh, yes, I remember. Good. So we took this resistance zone, actually the support zone here, as and then we had a stop hand trade here. Good. Okay. This is the thought process behind the trade, right? Now, we know that our bias is we want to buy the Australian dollar against the Swiss franc, right? So that's our fundamental bias. Then we come to our technicals, right? Ooh, this was bad. This was a very bad trade. This was a very bad trade. Okay, good. We come to the technicals, we've got a support zone here. We've got a support zone here. And then the market retesting here and then breaking out, right? So the thought process is we've got a breakout of the zone, right? Breakout traders are selling. We've got a retracement of this zone, right? Or a retest of this zone, right? Retracement traders are selling when price gets here. You see that price got here, and then let me zoom in. Da, da, da. Okay, good. So let me get rid of these things that look very weird. Okay, good. Now, this is what we have. We have the market breaking out here. Of course, we've got buyers here at the close of this hanging man candle here. And then the market convincing that it is time to sell, right? So we've got sellers here. When the market then comes back here, we again have people that are selling. Why? Because it's a retest of this zone, right? Even at the close of this full red candle here, we've got people that are selling, right? Even here, if we go on to the 1 hour, we've got price convincing sellers that it is time to sell, right? Oh, Jesus Christ. Living in the bundus, guys, is not an advantage. Living in the farms, when you stay in a farm, it's bad. Okay, good. This is what we have. We have the market breaking out here, right? We've got the market, come on. Okay, yeah. We've got the market breaking out. Breakout traders are selling here. We've got the market retesting, right? Retest traders are selling, right? This is on the hourly. Look at how beautiful these candles are. Look at how beautiful these candles are. Look at how beautiful this bearish engulfing candle is. Look at how beautiful it is. Look at how beautiful these candles are rejecting here, right? This is a sell, right? Sellers get in, the market goes to the downside, and then surprise, the market then begins to rally, right? Good. We know for a fact that this happened. We know that as traders, these are the things that we are looking at, right? So we know for a fact that there are traders that are still in this losing trade, right? We know that there are traders that moved and removed their stop losses, right? So when the market comes back here, we know that this is a point of interest. We know that there are people that lost trades here. We know that there are people that are still in these buy trades that held on till the market came back, that are going to close their their sell trades. And remember, when you close a sell trade, it becomes a buy order. We'll explain that on another day, right? So it means that we are going to have then a lot of demand coming in, right? When you close a sell trade, when you close it, it becomes a buy trade, right? So we are going to have a lot of buying that will be happening here, right? Now, this is the trade that we took. When the market came back here, we then entered this buy trade here, right? And then the market began to rally, right? And we got our 1:1 risk to reward, but we didn't close this trade. And then the market came rushing to the downside, closing our trade in because we had our stop losses right below. You know, let me keep a clean chart. Cool. So that is the trade that we took. And then, good. Then the market came to the downside, right? Okay, it's fine. Now, what is it that we are looking at now? And okay, another reason why then I shouldn't have taken this trade is because somewhere here we had news release. It was inflation rate. Let me get the Australian dollar. Give me a minute. So if I had not been ignorant of that fact that there is or there are news for the Australian dollar, then I most probably wouldn't have taken the trade, or I would have been very conservative with my profits here because I was trying to swing trade this pair. We are looking for Australia. There were news for the Australian dollar. It was inflation rate. It was inflation rate, and come on, man. Forgive me, guys. Uh, there we go. There we go. Okay, good. So it was inflation rate, right? So what we were looking at is that the news when were they released? January 2024. Where is the cursor? January 2024. Okay, there we have it, right? So inflation came down from 5.4 to 4.1. This was released on the 31st, right? I entered the trade on 26th, right? I entered the trade on the 26th. Oh, I entered the trade here on the 26th. Yes. Sorry, guys, not here. I entered the trade here. I didn't take my 1:1, right? And then the market came down. And then on the 31st, yeah, sorry, I took the trade here. I took the trade here, somewhere here on the 26th, as a pullback from this move. And then I was trying to trade this to the upside, right? Now, here's the thing. I ignored the fact that on the 31st, there will be inflation rate release. Now, inflation came in lower, right? It came in lower than expected, I think. Yeah, forecast was 4.3, and then it came in at 4.1. So inflation is come. It means that the Australian it means that rate cuts are coming, right? Rate cuts are coming. They will still be most probably be the last to cut rates, but rate cuts are coming for the Australian dollar, right? So how do we then look at this trade going forward, or this chart going forward? What is it that we want to do differently? Obviously, we will be looking at the data as we are going to have interest rate decision on Tuesday, I think, on the 6th of February, and then we are going to have balance of trade on the 5th, right? So it's in 2 days time we're having balance of trade, and then now this is how we are then looking at this chart going forward, right? On the daily, we have a very obvious support and resistance zone, right? Why are we putting so much work on our analysis? It's because this is our job. This is what we do, right? And we are going to try by all means to increase the odds of us winning, right? So we've got support here. We've got support here. So we've got a support and resistance zone, right? Now, what are we going to be looking at going forward? This is what we want. Our A plus setup. This is what we want to see. We want to see the market breaking down, coming down, breaking out of this support zone, convincing the retest traders that it's a sell, and then the market moving to the upside. We will be somewhere here waiting for the market to close, right? Once the market closes in the zone and we've got good news, then we trade to the upside, right? But if we get good news and the market is still here, it is still a trade, but there are certain trade requirements that we want to see the market giving us, and then we will enter to the upside. That is if the interest rates are held, right? If we've got the central bank holding interest rates and saying that cuts are coming, but cuts are going to come in later, then we know that we are going to buy the Australian dollar against the Swiss franc, right? So that is what we are looking at. And then let's look at another trade. Let's look at another trade. Let us look